Hello and welcome to The Bottom Line here on TVP World, where we break down some of the main business and economic stories of the day. I'm your host, Marie Cato. Thursday has been a great day for the Warsaw Stock Exchange and most especially for the WIG20 index. The WIG20 is the Warsaw Stock Exchange's blue chip basket, and today it rose by 2.3% in value, breaking the 3,000-point barrier for the first time since May 2008. Jan Kennedy tells us about the significance of the development in his report.
The Warsaw Stock Exchange's index of largest companies, the WIG20, surged to its highest level in years on Thursday. Finance and Economy Minister Andrzej Domański was quick to celebrate the milestone in a post on X, pointing to Poland's strong economic indicators.
WIG20 has broken the 3,000-point mark and reached its highest level since 2008. A 37% rise in the index this year reflects the strength of the Polish economy, accelerating GDP growth alongside falling inflation.
Another reason for the market optimism: apparent progress in peace talks regarding the war in Ukraine, with US President Donald Trump set to meet his Russian counterpart Vladimir Putin in the coming days.
Markets are interpreting the signal as a potential sign of incoming peace in Ukraine. And of course, such an interpretation is bullish for stock markets.
Investors reacted with joy not only in Warsaw. All CEE markets were up on Thursday, and so were major European indices, as well as the Moscow Stock Exchange. And there's another factor at play. Thursday also marks the beginning of a new trade world order, as Trump's reciprocal tariffs officially kick in, providing the markets with some much-needed certainty.
Business always appreciates when conditions seem clear, as it helps assess whether it is profitable to act in the current economic climate. Uncertainty, which we've had for several months, is always harmful for the market. That's why now, when it seems the trade war might be avoided, the outlook is more positive.
Still, the 15% levy is expected to weigh on economic growth across the continent. While Poland may not feel the impact as severely, other CEE countries are likely to face greater challenges.
We expect growth to be lower by 0.4 percentage points next year as a result of these tariffs. On the other hand, countries such as Czechia or Hungary are among the most affected countries in the EU because of their heavy dependence on industry and in particular on automotive industry.
But it's not all smooth sailing. Trump warned on Wednesday that if the EU doesn't fulfill its commitment to invest $600 billion in the US, the 15% tariff will turn into 35%.
The 3,000-point barrier for Warsaw's WIG20 index is a huge milestone. It is now the third best performing stock index in the world, and it has already gone up by 37% this year. But keeping in mind that US tariffs have now taken effect in the EU, we are now wary of the developing impact on market sentiment, and especially in the Central and Eastern European region. For more analysis on today's events, let's speak to Piotr Arak, Chief Economist at VeloBank. Hello, and thank you for joining us.
Hello, pleasure to be here.
So let's begin with that 3,000-point mark that was crossed today on the WIG20 index, a significant milestone. What triggered it?
Yeah, for sure. First, it's the overall good performance of the Warsaw Stock Exchange since the beginning of the year. So we saw increases in indicators, basically good economic output, and then it's geopolitics. So an agreement of sorts between Russia and Ukraine with the help of the United States is something that is going to decrease the shadow cast by the war in Ukraine, cast on the Central and Eastern European markets, economies, investment outlooks. So if there's some kind of certainty about whatever is going to be happening with Ukraine, it's going to increase investment opportunities. And this is what the bulls on the market saw. So this is an important opportunity to increase in value of the companies, so increase in the valuation. And of course, this is a great opportunity. If, of course, this agreement is going to happen, then, of course, we're going to see a correction. And some of the indicators, when they went so high up, they're going to be a bit going down.
So are you suggesting that the announcement regarding those potential ceasefire peace talks was that cherry on the top?
Yeah, that's the cherry on the top. Overall, the good performance of the Warsaw Stock Exchange, of the Central and Eastern European economies, more or less, because it's everybody's going up right now. So our economy is performing a bit better than average.
Okay. 2024 was mediocre for the Warsaw Stock Exchange. 2025 was an upward trajectory, and that's what we've been seeing. And we've covered that in previous episodes here on The Bottom Line. Experts have said that that is partially due to the potential ceasefire peace talks that we have heard that may happen. Well, I think we've just heard that this is scheduled for next week. So we are expecting some significant developments. But overall, we have had a sense that this year is going to bring about some significant developments on the Warsaw Stock Exchange. So some people have been saying that that 3,000 point milestone was expected. What are your thoughts on that?
Yeah, well, I feel a lot younger right now because the last time we went so high, it was in 2008, just before the market went down and Lehman Brothers went bankrupt. So it's a long way to go. So this is just before I started my first analytical job. So the Warsaw Stock Exchange kind of developed very, very rapidly in the last months. So I'm always frightened in situations where you see such increase in values of companies, and of course, in the case of the New York Stock Exchange, you have the Magnificent Seven technological companies. In the case of Warsaw, you have capital flows from outside of the U.S. looking for a business opportunity and basically on increasing in value because the New York Stock Exchange was not performing as good as other stock exchanges, or the uncertainty caused by Trump made some of the investors look for other opportunities as the Central Eastern European markets.
We have a graph here, actually. We just have a graph that shows 2024 and then 2025, so we can see the, huge difference, really, in comparison to 2024 and this year. Can we expect the Warsaw Stock Exchange to continue going up in value this year? Do you think that there is a ceiling of sorts for this year? And do you expect investors to come along this year and to keep coming? Are they going to continuously be attracted to our markets?
They're going to be attracted to our market because of the fundamental valuation of the economy. So we're going like the economy is growing. That's the basic fact. So unemployment is low, economy is growing, public investments are increasing. Consumption is overall not as bad as we expected it could be. So yeah, there are some solid grounds, but then there are some additional issues. So interest rates are going to be going down. So a lot of the capital available to companies is going to be cheaper. So companies might get debt in order to grow more, easier. But then a lot of banks are on the Warsaw Stock Exchange and are also part of the main index of the WIG20. And this means that basically some of those banks are not going to have revenues as high as in the previous years. So this is going to decrease the possibility of growth for the index. And then there's also the questions about corporate governance. So we just got to know that one of the key CEOs on the Warsaw Stock Exchange of PZU just went away, and this is just a year after he was appointed. So if there are going to be some additional changes to any of the management boards on the Warsaw Stock Exchange, this also doesn't create this vision of certainty about what's going to happen with the companies.
So other European stock markets have also responded positively today. Would you agree that this is a response to the onset of the US tariffs, also the announcement of these peace talks between Putin and Trump? Are we looking at a time of some stability, some hope, some kind of order after a period of uncertainty and chaos?
Well,
let's take. We have some figures here. Let's
So I just said before the program that when you look at the charts for all the stock exchanges, bigger and smaller in the Central and Eastern European region, the Russian Stock Exchange, you can see that this commentary coming from the Kremlin stating that this looks good for them, so that this might mean that they're going to have a kind of agreement. And of course, the terms are not great for Ukraine, but still it means that Ukraine is going to become still be an independent country with a possibility to enter NATO. Nothing blocked for them, a part of the chunks of the country that has been annexed by Russia at this stage. So it's not a great deal, but probably this means survival of the country and independence of the economies, much like Finland in the 1940s. Circumstance with the war with the Soviet Union. So this is something that a lot of markets see as something good. We're going to have certainty. We're going to know what's going to happen if this agreement is going to be brokered and if Russia is going to fulfill the terms of the deal. And of course, getting more. This also means lifting sanctions from Russia, something that a lot of German companies were expecting for. So they were looking pretty much for cheaper gas, cheaper oil, coming to the not very good economically growing economies of the Eurozone. So pretty much everybody wants to have a deal, some kind of a deal with Russia, so that from the business sector to export their goods, to import cheaper energy, and to basically come back to a different the previous period of time when we could have normal relationships. This is not a great news for Poland overall in terms of the geopolitical situation, if situation with Russia is going to be normalized, in terms of the certainty on investment, on the inflows of capitals, the shadow that we saw on the stock exchange, on the FDIs coming to Poland since 2022. This is something that's going to be lifted, and this veil probably is going to help to grow this country even further in the next years. But still, the geopolitics of a situation when we're going to have a normalized situation with Russia is not that great.
Mm-hmm. Talking about the reasons behind a market rally, I just want to go domestic for a moment. So earlier this week, the Minister of Finance and Economy, Andrzej Domański, he announced a new investment tool known as OKI, OKI. So it allows private individuals to invest up to 100,000 zloty in tax-free in capital market investments. And obviously it's supposed to prop up the Polish capital market. But the reaction was lukewarm, definitely lukewarm when you compare to what we are seeing today. I mean, obviously today's reaction is monumental in comparison to that announcement. Can you just give us a little bit of commentary in regards to that announcement and today from that market perspective?
Because a lot of the investors expected that there are going to be additional changes to the capital gains tax in Poland, and this kind of new investment vehicle is something interesting. Everything that is going to increase the investment rate in the country, specifically on the home market, is good. But then it does not create additional investment. So basically, nobody sees it as a big opportunity for additional capital to go to the Warsaw Stock Exchange because of it. And this is the first proposal, so we don't know what kind of scheme is going to be implemented in mid-2026 when it is supposed to be coming into force as a regulation. So nobody saw it as a game changer for the stock exchange, basically. But then maybe this vehicle is going to change a bit during the consultation process, and then we're going to see it performing better or attracting additional investors. So, peace talks, geopolitics, Russia, this is something critical for the Central and Eastern European region. Some kind of new legislation, not so much, I would say.
Okay. So the overall understanding about these US tariffs, which have now kicked in Europe, is that it won't impact Poland too badly. PKO SA prepared a note recently saying that the tariffs are going to affect around 1% of Polish production companies' revenue.
Yeah.
So
that's
very, very minimal amount. So the market reaction is pretty calm, if not positive today. I think the understanding is that really we know that the US tariffs have kicked in, but it's really not affecting anybody. It's just almost like a formality in the press that this has happened. What are your comments in regards to that?
Yeah, you know, those production companies that are directly exporting goods to the American market would like to have some certainty. So these window producers or, you know, some kind of smaller businesses that are dealing directly with the U.S. market, they just want to have certainty. If it's 15% or if it's 25%, they just want to know how do they have to do what they're dealing with, what the pricing is, how to get, you know, agreements with the contractors, how to, I don't know, decrease the margin a bit to stay competitive, and how to price the goods sold to the U.S. So that's why everybody's is very calm about the situation. Certainty creates value. Certainty is very good for long-term agreements. Then, of course, it's the upheaval on the European level. So the agreement which a lot of the markets, specifically the euro, saw as not as great of a deal that Ursula von der Leyen said in her press commentary. So this is not seen as something terrific for the European, for the
at the same time,
Eurozone.
I think we need to acknowledge what we saw in the figures, that, for instance, the Hungarian and the Czechs, their impact to their GDP, so not just production company like businesses, is 0.3 to 0.4% of their GDP, but their markets are still reacting positively today. So.
Yeah, because they have an agreement. Yeah. So it means that the situation when there's no certainty about what the U.S. is going to do with the BMWs, the Mercedes-Benz going from Germany to or some other Central and Eastern European countries directly to the U.S. market, that's something great. So uncertainty decreases production, decreases optimism. Basically, it doesn't make those managers able to create a strategy, a viable strategy of what is going to happen in the next period of time. That's why those CEOs of the automotive companies demanded that the European Commission has any deal with the United States, so that they can just know the terms of trade, basically. To move on some sorts. If U.S. is going to decrease, what kind of deals are we going to have with India, China in the next years to come, and just to deal with the U.S. and kind of prepare a strategy on how to deal with climate regulations and additional stuff on the internal market. So nobody needs a war with the U.S. This is why the deal is seen as something positive, although the terms are not great for the European Union.
So it's the clarity of the deal that is positive.
Yeah, the clarity is something that everybody demanded. And the one thing I'm not so sure about, that we're going to have clarity. So as the first statements come from we don't have a signed agreement. We just know the general terms that the President Trump agreed with Ursula von der Leyen. We don't know what's going to happen with aluminium and steel. Probably the tariff is going to be 50%. There are some additional specifics on the tariffs that are going to be implemented by the U.S., which we are not clear about. And then, of course, it's the need to buy additional energy coming from the United States.
And the investment.
And the investments in the United States by European companies, which Ursula von der Leyen cannot promise.
Sure.
Because this is the nation states deciding.
I want to squeeze in one more question before we wrap up. Very briefly, a theoretical question. If the war in Ukraine ends in some way, shape or form, what does this mean for Poland's economy and for Poland's markets?
Any kind of deal that Russia has with the United States and with Ukraine, it means growth. It means more FDIs. It means additional involvement of Polish companies and of Polish economy in the reconstruction of Ukraine. So it pretty much means that we're going to see more growth opportunity. For our country. So any kind of deal is good for Poland. It's very good for eastern part of Poland. So the eastern infrastructural hub, logistical hub could be very much infrastructural hub for the development and reconstruction of Ukraine in the years to come. We're going to probably have to invest in that, but yeah, this is a great opportunity.
Okay. Piotr Arak, Chief Economist at VeloBank, thank you so much for being with us.
Thank you very much.
And that concludes the bottom line for today. I was your host, Marie Cato. We bring you the best of regional business Monday to Friday at 5:10 CET on TVP World. And in the meantime, for the latest in regional business, follow us on X and on tvpworld.com. Goodbye.